Welcome back, everybody. And I have Jeff Deering with RIS Insurance. Jeff, thank you so much for being here.
Thank you. Great to be here.
And remind me,
Renters, it's Renters Insurance Solutions.
Renters Insurance
I
Solutions.
don't say it often. We just say RIS, but it's Renters Insurance Solutions. So I should say that.
All right, thank you. Because I always say RIS, and then I'm like, well, is it RIS Insurance or
I
Resident
know,
Renters
I know,
Insurance
I know.
Solutions?
Yeah, we
So
probably
thank
should
you
have.
so much. All
Yeah,
right. So I did as of this recording, I just got back from Texas style, and there was a lot of talk about insurance, especially property managers selling insurance without a license. So can you kind of expand on what you're hearing and what you're seeing out there as far as these property managers and insurance?
sure. Absolutely. Thanks. It's interesting because from our perspective, we're looking at all 50 states. I'm having phone calls with property management companies throughout the week, every week. So I might have a call in Oregon, and the next week it's Vermont, and so we are seeing some trends happening. Of all the insurance boards out there, one of the toughest and most stringent is the actual Texas Department of Insurance, and I think that's the one Brad ran into a little bit that he was discussing at the board at the last meeting here, which was really good. So when you're offering a product, a guarantee, and you're taking money in, they look at that as selling insurance, selling a guarantee, and that's what we're running into right now. And each state is looking at this. They're looking at ancillary fees. What they call junk fees is the new term out there in the industry. So we're trying to anticipate that. We're looking well down the road. We saw this coming, for example, with California. And so last year we started filing with all the boards, insurance boards in the nation, our animal pet policy, which we now have because California just outlawed, if you want to call it that, outlawed, mandated that you cannot collect a fee for pets in California. So now we have a insurance product that's filed with the state of California that protects that owner and helps that PM company not to be blindsided by this mandate.
Wow. Okay. So
A
you
lot
can't,
going on.
so you can't even have a pet fee in the country of California. That is,
And yeah, and to follow up on that, there's 7 states that are following California's example. Colorado, of course, is one of the examples, and there's I think 5 more after that coming.
so I know a few years back, especially through NARPM, a lot of these property managers, me including at Empire, we had like a bundle of products that we called assurances, right? So not insurance, but assurance. And one was like the pet assurance. So the way this product would work is, you charge a pet fee
Right.
instead of pet rent. And then if something, and that went to the property manager, not the owner, and if something happened to the property, then the property manager would assure that they would, give you up to some, crazy amount, $5,000, $2,500 towards any kind of pet damage. It's like a pet damage assurance. And so you're saying that is considered insurance now in California, or is that considered insurance in most of the states now?
Well, that is, I think, you're zero, that is exactly what Brad's whole discussion was on one hand, it
And you're talking
wasn't.
about Brad Larson, who just spoke
Yes,
at the
at,
Texas
at, at the Texas Style Conference. He
on
made a
insurance.
presentation of
Mhm.
what he just went through, and I thought he did a fantastic job of describing what you said between assurance and insurance. So legally, you can offer some of these types of fees, but then when a ruling body, for example, a Department of Insurance looks at it, they can kind of do what they want. And it's so here's an example. In Texas, I'm in 3 counties, which probably has 11 or 12 different justice of the peace. They're the entry-level courts in Texas. I can go to all 11 in one day and get a variation of rulings. They're all a little different. And I can argue it all day long, but they're tenant friendly. And that's what's happening. They're looking at a property management company taking in a fee and then giving out a guarantee. And the boards are looking at these insurance boards are looking at this as, hey, you're collecting a premium and paying out insurance, and you're not an insurance. That's not filed with our state. You're not an insurance agency.
And
So
even if you were, if you want to go get licensed and become a licensed insurance person, it still has to become a product, right? Like I can't, just because I'm
exactly.
a licensed insurance person doesn't mean, or a licensed insurance agent doesn't mean I can go and just create my own products and sell them. Is that?
That's exactly right. You have to file these. They have to go through the scrutiny of amateur, all these different filings with the state, and they come back, and it costs lots and lots, hundreds of thousands of dollars to file these policies. So you can't just go get a license, like you said, down the street and then start offering a product. It has to be filed with the state.
So is this the same concept with the eviction protection? Is this kind of the same thing? Pet assurance and eviction protection is the same thing, or does the eviction protection, again, if I have eviction protection, I'm offering, if you pay X dollars to get protected, and if somebody
Yes.
evicted, then I go ahead and I'll pay the rent throughout the eviction, or we cover X amount of dollars.
It's exactly the same thing. And we offered it for years. And then we were like, wait a minute, they're ruling on this. And in the flavor of the ruling, we stopped offering that because you're offering insurance. And so really we just, why put a target on your back? There are ways to do um, to get the protection you need. We're coming, there's other companies too. There's that have these out there that are filed with the state. For example, the pet policy I just brought up. Those are filed in all of the states with the insurance board. You're not going to get any trouble. You're not going to have a target on your company's back.
Why do you think that it's, you know, why do you think, for one, in we'll talk about Brad Larson's case in particular, but why do you think they went after him? Like, is this something like, because usually small, even though Brad's kind of a bigger company at, I think, about 1,200, 1,500 units, something like that, it's still small potatoes. Uh,
Yeah.
and so why do you think all of a sudden property managers have a target on their back?
It just seems to be in the atmosphere right now, federally, that has come down over the last few administrations, I believe, has trickled down. The attitude has, or the message has gone out. And then when you get the coast, New York side and California side, all the way up to Washington, it has become, almost socialist, as if the owner is evil. And these mandates, we all want people to be protected, of course. We don't want to take advantage of our tenants. But, when I go to these courts, like I was mentioning, the JP court, I went in there and this one uh, judge was ruling in the favor of the tenant. And I walked up there and I said, Your Honor, my owner is 2 months behind in their mortgage payment. It's like they don't even look at that. It's like they think they're dealing with Home Depot that has deep pockets, and I have an investor here that's
For the big
4,500.
bad, the big bad landlord and the big bad property manager
Yeah,
company.
yeah.
Yeah.
So in Brad's case, Brad is unbelievable. He's a trailblazer. Most of the people listening to this podcast have probably benefited from something Brad has done 2 years ahead of them, which is I can say that personally. And when you're a trailblazer like that, you eventually get hit on one of them because he's aggressive.
He
And
is.
he didn't offer one thing, he offers seven things because he's a businessman. He's not a mom and pop. So he's always tinkering with the system, right?
Yeah, and look, let's be honest, right? You go into an eviction court, there's probably 10 lawyers for these residents, and probably 0 to 1 lawyers for the property manager slash landlord, right?
Exactly.
And
Yeah,
so,
exactly.
and I think you said it right. The junk fee stuff been, whether somebody, had a bunch of junk fees, and like some maybe
Yeah,
Blackstone or something to kind of push down to the mom and pops, but
yeah,
owning property is evil in this country. All of a sudden, create any kind of fee, trying to make any money. Um,
right.
it's getting more and more difficult. So, all right, so I want to talk about a couple other products though. Some of us offer tenant liability. I know like I won't name names, Appfolio creates they actually will put a tenant liability thing on your tenant's portal. I don't know if sometimes they don't even ask you if they just kind
Yeah.
of do it. And
Yeah.
they're selling insurance.
Hmm.
And then other times you know, somebody will put it in like the resident benefit package. So I guess my question is Appfolio okay to sell that tenant liability insurance product? Number one, and number two, how does it benefit the property manager more so than like a resident benefits package, or if the property manager had RIS or some other type of resident solution?
Right. Well, you can go through all the hoops and the money and get with companies that'll make it legal to do something like that, to offer it through software. I think the issue is what are the pain points that a property manager or an owner of a property management company, there's so many challenges with property management on a daily basis for their staff. And so what are the pain points? The pain points we looked at were onboarding, is just another, oh my gosh, another thing, another project, right? So we tried to make an easy pathway for onboarding. So we develop the report in your software. We can do any software. We do any training for your staff. We don't want them to have to become programmers to implement this. The second challenge pain point was tracking. I've got two guys up in Idaho. These guys are incredible. It's Andrew and Matt Johnson up there I think they're in Boise. These guys are phenomenal. They grew up, they were like 4 years old. Their dad had this company. They're well above that now. They're in their upper 40s, probably, or 40s or something. But these guys are so methodical. And they came in and they wanted they were going to hire someone. And I remember talking to them, yeah, we're going to hire someone to do all the tracking for our insurance. And that was it. I'm like, you're kidding me. So we solved that issue for them because we want to be a solution. So tracking is an issue with insurance. You always hear that people put it in their PMA and they put it in their lease and no
Oh
one
yeah, they
tracks,
they they pound their chest. Yeah,
right?
we make sure that the
Oh yeah.
resident has insurance before we
No
give them.
one does it.
And I mean, even if they do it, the resident then can, basically cancel insurance 2 days after
Right.
they move in, and they don't
Yeah.
have no idea.
Yeah. So we do all that for them. And the other, so I'm mentioning these three pain points. It's onboarding, tracking, and submitting a claim. Because whatever company you use, if it's not ours, these are the three things you're looking at. We learn this from our clients saying, hey, y'all, we need a better system for submitting a claim. So we have a portal. And this was developed by property managers. So the solution is whatever you're sending to the tenant, the lease, the Z inspector photos, the disposition, you take that same information and submit it in our portal. We want easy, easy, easy. And that's the challenge. So that's whatever company you're looking at. Some of these companies like Appfolio, et cetera, they offer liability protection for the owner, which has become the standard in the industry. They don't have content. Wait till your tenant has to submit a claim because a lightning hit blew out all their electronics and they come to you, hey, I've got this insurance. You go, no, you don't. They're like, what do you mean? I'm paying this every month. No, you don't. You don't have content. That's not fun. So we would not have a product without having content on it.
Got it. So the Appfolio products of the world, or the ones from the software companies, typically don't have tenant content, it's just tenant
Most
liability,
don't.
which the tenant liability covers your owner. But yeah, the resident is kind of a client too, and we're not
Yeah,
covering them, and they think they're getting hoodwinked, right? When it's like their stuff's not covered.
they're not happy.
And then another challenge that I think you're saying is with that software product, they can click on it, get the insurance, and you would never know if they actually had it or not as a client, as a property manager,
Right.
unless I guess
Well,
it's in the software, I would think.
you're right. You're right. They can. One of the things you touched on a little earlier was selling insurance back and forth. Can we do that? Can you just go get a license? One of the real differentiators is we add you to our list, meaning when you get a policy, we want it in the property manager's company name, not in the tenant. So the tenant is not purchasing that. So that helps for a couple things. One, you're not taking premium in for the tenant.
Okay.
You're purchasing it as a company. That keeps
How
it
do I get the
separate.
money? How do I get the money from the tenant? Because that's going to cost me, right? So how does that work?
There's different avenues. What a lot of people are doing right now is it's just wrapped in the resident benefit package, so they're collecting it with that, or it's just put in their GL codes with the rent.
And
That's
they get
another
they get a
option.
rent charge and then they get a insurance charge.
Exactly. The other one that we're working on, well, we've already kind of got it, is to keep it absolutely out of your software, to not bring your property manager into it at all. It's a link with your company. The tenant hits it, they're required to, and they go and they purchase it there. It's still in our name over here, and it keeps it from going through your software. That's one of those items that's coming down the pike right now.
And if the tenant moves out or they, when that property is vacant, am I, as the property management company, paying for that insurance when the tenant moves out? Or is it based on property or is it based on tenant?
It's based on when the tenant is in the property. When the tenant leaves, there's no need for the policy.
Got it. So the policy gets kind of put on hold for that property. And then 2 months later, a month later, when I re-rent it, then the policy kicks
Yes.
back
And it
in.
starts over again. Because remember, this is tenant liability. If the tenant burned down the kitchen or made a, caused
Is
a
it, but it's
flood,
contents too in this policy. It's contents too, right?
it's content for the tenant.
Right. And liability for the owner.
Correct.
Right.
That's
Right. So
right.
if the tenant is cooking in the kitchen and they create a fire and it burns,
Yeah.
or the kitchen, um,
And
that's caused by the tenant. Tenant liability would cover that.
and I'm surprised how often this happens.
So
It's
you
something
said
else.
it's easy to track. So how, as a property manager, if I wanted to use RIS, how can I say, all right, I want to make sure that the tenant now, they don't have to show me proof of insurance because I just enroll them in it as soon as they move in, and then it's getting charged a monthly fee for it.
Correct. Now,
Right.
keep in mind, one of the things to remember, and it is state to state. There are some states that this doesn't apply to, but they have the right to say, I have my own insurance and bring it in. And our company, at least with us, will verify that. That property management company doesn't even need to spend time seeing if that insurance is real. We'll do that. You upload it to our portal, we'll verify it, we'll come back to you and say, yeah, they're good to go. They've got their own insurance. That's so few. It's 5 or 6 a year. It's very, but you have to offer it legally.
Got
Yep.
it. Okay. Now I cannot, if let's just say we'll just throw a round number here. Let's just say it's $10 a month.
Yeah.
So insurance is $10 a month. As a property manager, I cannot increase that to $11 a month. Is that a fair statement? Like I can't
That
use
is a fair
can't charge an
statement.
admin fee, things
Yeah.
of that nature. So this used to be a profit center, and now it's no longer a profit center.
Well,
Is
it
RIS?
is in two different ways, possibly, depending on what company. As you mentioned, I've had clients where I'm talking to them, and they go, "Oh yeah, making up a number, then like you said, $10, and they're charging $19," and that's you can't do that. You have to file the admin fee in each and every state. For example, just as an example, ours has a $2 admin fee on the renter's insurance. And so you can do that. Now, wrapping it into a package makes it a different deal. But if you're doing a standalone insurance, you cannot make up what you want to do as an add-in fee.
Got it. Do you recommend, and I'm going down a rabbit hole, but do you recommend the insurance be in a benefit packet or do you recommend it be outside and it be its own thing? What is your best practices?
Best practices is it works better if it's in the RBP. Our company has already designed a number of solutions for when that day comes that's not recommended. It is a little more state specific. Right now, you can do that. I wouldn't absolutely discourage it. It's a very high rate of acceptance for your insurance. Um, but that day is coming. when we're going to have to separate that out, and we're prepared for that.
Yeah, look, learning what I learned over at the Texas State chapter and what I'm learning from other property management companies, if it was me, I would probably pull it out and have it separate now. That's just my opinion. Um,
Yeah.
does RIS have kind of a rev share program, or anything
Yeah,
like
they do.
that, even legal? Like what's going on
Yeah.
these days with that stuff?
Yeah. We have, I call it kind of a trust fund, but it's you get a certain percentage of all the premiums you bring in through the year. There's almost no companies doing that. The company we're affiliated, the insurance company, is doing this like 38 years. Um, that's how we like to meet with people and go through those kind of numbers. They're impressive, I'll say that. And what you quickly summarize in your head is, wait, why am I not getting this from everybody else? They're not sharing that with me. So the way we look at this is we are going into partnership with someone, and we take that very serious, that partnership. So what we have is, we just have direct access to decision makers. We don't have many layers. It's not like trying to call Google or Appfolio, et
What you're gonna
cetera.
get is an AI bot anyway.
That's right. I used to get on with Microsoft and I would call these guys. I couldn't believe I could call them. They would solve issues. Now it's like, calling the moon.
Like
So
God.
I'm one phone call away from the CEO and president of this thing, and I call them weekly, and we talk through issues, because within the guidelines of insurance in that state, there's some flexibility and customization for each company. Uh, but there's a
Could
significant,
even a company in California participate in the rev share?
yes, yes, they can. Yeah.
And then how long does it take to get rev share? Because I remember talking to you guys about this like a year ago, and it's like it does take a little bit of time, right? It's like I think 18 months. It's got to, was it 18 months or something like a year? It's got to like
If,
you got to build up the
yes.
reserves.
Yeah. And, remember, we're in the extremely highly regulated, insurance is just so highly regulated. That's most of the wait time, is the requirements of an insurance board with their numbers. They have to have certain numbers before you can start dispersing any kind of dividends. But yes, I've seen it as early as 12 months. It can be up to 18 months, in that range. And really, you got to get through a year and see how policies are playing out. And that's company by company. I've had one company go very quickly, and others like, we got to wait a while.
Does the tenant liability insurance have anything to do with age or anything to do with the house, since it's liability on the house, or on the residents? Do they have to fill out like any kind of forms, and you have to like look at their like credit score or anything like that?
No, with the tenant legal liability, it's just offered.
Okay.
No.
All
Yeah.
right. So now I'm gonna pivot into security deposit this alternatives.
Yeah.
So that was a big thing. A few years back, we had, I think it was Obligo, Rhino. They kind of made a big splash. They came from
Yeah.
multifamily, came into single family, and originally, people that were on it loved it. And there seems to be kind of a shift going back into traditional security deposits. And
Yeah.
I'm hearing a couple of things. One is, originally when you had a security deposit alternative, it's like, oh my God, you rent the house so much quicker. Oh my
Yeah.
God, you have more control. Oh my
Yeah.
God, things are better. And then now you're hearing, I don't rent it much more quickly. I don't have as much control. It's hard for somebody to move from, like, if somebody fires me and goes to another property manager, there's no security deposit to move over. And then I'm even hearing people do more damage to a property that they don't have security deposit in.
Right.
Yeah, which I don't know if I believe that. I don't know if the numbers are there to prove that, but
Yeah.
um, and then there are some people that saw that there's a lot of money to be made, that they actually created their own security deposit assurance. So I guess the first question is, if I will do a security deposit alternative and I wanted to hold all the money myself and just kind of self-insure, that's not legal anymore. Is that
Only in a few states.
okay? So in a few states you can do it.
Very few, but it's very dangerous. You can get hit with hundreds of thousands of dollars, and we've seen that, fines. and they can even be referred to the attorney general at that point. It can get serious very quickly. These boards can be like dealing with the IRS. It can get scary very quickly. And defending yourself in these, and I'm not making this up, these are real, and it's more than just Brad. They can be anywhere from 30,000 to 100,000 trying to defend yourself, depending on how significant the issue is. So yes,
You would recommend either doing traditional security deposit or some type of alternative using a third party. And I'm assuming RIS does it have a solution for this, a security deposit alternative?
yes, we do. It is actual insurance filed in every state. So we don't just do federal, we've filed in all states. That's very important. So
Can you give a high level overview of what the actual how it works versus a
yeah,
traditional security deposit?
yeah. It's interesting. You mentioned, Obligo and Rhino, and what we found is along the way, yes, people were very happy with them because they were paying out like crazy. And then about 18 months ago, close to 2 years ago, they retracted significantly. And I had more of some of those companies, clients coming to me, uh, almost they were barnstorming me because they were having significant issues. The payments changed. So what we found was the staff was having issues with renewing every year. That was a big pain point for the staff on those other companies. So we got rid of the renewal. If you come into a policy with us, which is an insurance policy, you have to meet a certain, let's say, 600 credit score, because you can't have a company come on and gut the system by saying, hey, well, I'm going to put every high risk tenant on this. And you've got 19 evictions in 6 months. That's not good for anybody, especially you'd think for us, but especially your owners. It's terrible for your owners to take
So
on those kind of
talk a little bit
clients.
about how the security deposit alternative works, right? So we all know how the traditional security deposit works, right? Traditional
Yeah,
security deposit, it's $2,000 for rent. You get $2,000 security deposit. They do some
yeah,
damage. I write it, they lose a little bit of that money and then they get the rest. And if they go over, then we charge all of that back and then we come after them
yeah,
and, in small claims court at the worst or just send out letters and
exactly.
get that money. So a security deposit alternative, they're not paying any money into the security deposit. They're not giving a bunch of money up front for security deposit. So talk a little bit about how that process actually works.
Right. The concept is that the resident is having the luxury of not having to bring up the $2,000 to get in. They're paying a fee to skip that. They're not paying security deposit. They're not paying out a security deposit. It's only a fee. The insurance company is protecting the owner. So the property management company turns around and purchases a policy on behalf of the owner. It's in the property management company's name, not the tenant. You have control over that. You're not collecting funds from the tenant for insurance. You're not acting as an insurance agency.
But they are
You're
paying an extra fee, right? Another line item
They're
fee.
just paying a fee for the right not to have to put up a security deposit.
Got it.
It's a
Okay.
convenience fee. Yeah.
All right. So it's like a convenient and inconvenient,
Yeah.
convenience fee.
An inconvenience fee. Yeah. Yeah.
All right. And then now in this case, does the resident credit score matter? Or you said something about the average portfolio, whatever. Like, does the average age of the home, does the average type of the home, is the average security deposit, sorry, security deposit, the average resident, like, does that all come into play to get approved to be part of this security deposit alternative?
Well, each company approaches this a little differently. At this point right now, we evaluate each property management company. We're trying to not, we don't want to in slow down the process basically
Okay.
by adding a bunch of steps to the tenant, which slows down your application process. We qualify the company once, and then once the tenant goes through the application process, the PM company can offer
And
the
what are you looking
product.
for from the PM company? Like, do you have to have a minimum number of units? Do they have to be all like a certain class, certain level of um, uh, rent? Like, what are you
Right.
looking at?
Yeah, it's interesting because that's a good question because we could have what a model that someone has $800 rent properties. We call that a C level property possibly, or an A level that's 2,500 to $3,000 in that range. And all three of all those types of companies can be very profitable with this. What we're looking at, the bottom line is how many evictions are they doing a year? We're looking at how much security deposits they're bringing in and what they're paying out, what they're taking out of the security deposit. So we're doing a risk assessment on the company.
And
And we've had
how do you
people
gather
come
that
in.
information? Are you looking at their, I guess you have to look at some financials, some books. Do they have this information most of the time?
Yeah, we've made it pretty easy. We year one, it was like being audited. What we've done now is we just pull a certain number of dispositions from their company. And in Texas, it's a two-page PDF, and they just drop them in an email and send it to us, and our underwriter looks at the numbers. Very easy. Most people just send them to us, an hour after our phone call.
Oh, nice. Okay.
Yeah,
All
and
right.
they
So,
rate it.
and in that case, so the benefit to the resident with the security deposit alternative is I don't have to come up with double, triple rent sometimes
Yep.
to get in. And who has $4,000 or $5,000 sitting around these days? Not many people. Um, but I do pay a smaller fee monthly for the right to do that.
Right.
Now, if the benefit to the property management firm and the owner is even though I'm not getting security deposit, I'm getting a monthly fee that is not, I don't have to give that back to the resident, right? So I don't have to do a security deposit disposition as far as that's concerned, but I get that fee. And I get in theory, I rent the property quicker because I have more people who have the money to rent that property.
Yeah, it's a tough thing to measure. One of the things that we're seeing as we talk to other clients is that the way it's worded as a no security deposit company in your MLS, your multi-listing, is that I can't verify speed. You're getting more people to apply
Okay. Which
with
which
our
in
verbiage.
turn which in turn would get you more leads, more
Exactly.
applications, and more application made you need.
Exactly. Uh,
Now, tell me what happens if when the resident moves out and the property is super clean. There's nothing there, no harm, no foul. I don't have to give anything back to the resident. I'm not sending them anything because there is no security deposit disposition for the resident. Is that correct?
correct. Yep. They're
Okay.
they're off and
All right.
they don't know
Now,
anything.
let's say the resident leaves it in pretty good condition, but there's some cleaning that needs to be done, right? There's some
Right.
massive cleaning, a few $100s worth of stuff. What does that look like?
Well, just submitting a claim, we have you submit this exact same information. Here's what we don't want to do. We don't want to send you a 6-page insurance form for fill out, and every time you see it, you're like, "Oh my gosh, I got to do this again." We we just designed it to where you've already done what you have to do for the tenant. So you just upload that same information to your portal for us, and in 48 to 72 hours, we're ACHing you that money.
Got it. Okay, so I'm not putting an official claim. I'm just putting in all the information I normally put for security deposit disposition up into the portal, but I'm not doing
Right.
security deposit disposition.
But the paperwork you filled out that you normally do in processing that to the
Disposition.
own to the tenant is the claim to us. It's showing us what you're asking for the tenant is what you're
Got it.
asking for us to pay.
The monthly fee that the tenant pays, that's going to RIS in this case, or to the security deposit alternative company, not to the property manager. Is that a fair assessment?
Yes, since it's an insurance product, you're being charged for an insurance policy and we're billing you once a month. You can tack on a state by state admin fee. So you are making money on the
Okay,
front end.
got it.
So we'll pull that report weekly to see who's coming on and going off, which we build into your software for you. You don't have to track it. And then once a month, we'll bill you.
Got it. Now, what
Yeah.
happens if it's like a disaster and it was an eviction and
Yeah.
what is it? Is
Yeah.
that the same concept as if it's just a car
Yeah.
accident?
Yeah, we see those. So let's just use that. Let's say that you had a policy that's $2,500 and they did $5,000 worth of damage. You're going to send all that information to us. We're going to process it and send you the $2,500. And our company, the way we're set up is we will do the collections for you and go after them. Now you are, as the property management company, you're responsible for the other half of that 2,500 of the five. So we'll do one half, you'll do the other. Now, if you would like for us to do all of it for you, we'll do that in the collections. But that's kind of how that works. Just like a traditional security deposit, even though these rules are outside of your state's, like in Texas, 30 days, you have to close that out with the tenant. Insurance is not under that requirement, but we train every PM company to do it the exact same way, so there's no confusion.
So I just want to make sure I hear this. So when a resident gets that quote unquote security deposit alternative, they're still only getting a certain amount. It's not infinity. It's in this case, we'll just use 2,500. If
Right.
they do